Hello and welcome to another video in this series where I'm showing you guys how I build trading strategies from scratch using Claude Opus, controlling my computer. So in the last video, I showed you this strategy, the double EMA strategy that Claude Opus was able to build for me. If you haven't seen it, go back and watch it. But in this video, we are going to be doing a mean reversion strategy. That's just going to be the baseline, and then we might add filters from there. We're going to open our Droid terminal. This is Claude Opus 4.6 enabled, and I'm going to enable it to use my trading engine to build a trading strategy and then backtest it and optimize it for me, and then test different trading rules using the logic for it. So we're going to be using mean reversion. All right, now that it's operating, it's going to build mean reversion 1, 2, and 3. It's going to run it through our backtesting engine. And let me tell you about this backtesting engine. What it does is it fetches data directly from the stockbroker. In this case, we're using crypto, so it's going to be a cryptocurrency exchange where you're using the Binance data, and then we're just downloading that stock data, and then we're backtesting on that data. So we splice the data into several parts. We have our first part, which is just the training data. This is the data that we train on. This is the original data, and the one you're looking at here on screen, this chart, is the out of sample data. So the in sample data is what we are backtesting on. And then we go to the bootstrap training simulations. So that's where the candlesticks get randomized. So think of it this way. If there's a possible parameter set that we can use, just think of these parameter sets as tuning one parameter here. So these four in conjunction with each other is considered one full combination. So if I change the next one, that's a different combination. And so we want to test as many different as possible. So for me, I'm doing 2,000 back tests. That's 2,000 combinations. So it will go one by one for this. It'll keep these three constant, and then it'll move the second one and then move the third one, and so on until we do all the possible variations. Also, I see that most of you guys aren't subscribed yet to the Trade Tactics YouTube channel. I am setting a goal for 100K viewers, so we're almost there. Just hit the subscribe button, and I'm responding to comments below for the next 24 hours after the video is published. So if you want to have your question answered, comment down below if you're watching early, and if it's later than that, hit the bell notification. I'm upload usually 3 to 4 times per week, so just comment on my videos if you have any questions in the future. Now, quickly heading back to our Claude Opus, it's chipping away at just building our strategies automatically, and what this is doing is just prepping everything for the run. And this backtest system has to calculate all of the trade, the profit and loss, all of this here, the commission, the average bars in trade, Sortino ratio, all of this stuff is done totally custom. And so you can use things like, I would probably go with vector BT if you're building in Python. There is Backtrader, but it loops candles one by one, which basically, if you're not inclined with coding, that's way slower than just vectorizing the entire data set and then throwing it in all at once, because you're saving basically thousands of hours doing that as well. Like if I was running 2,000 back tests, going candle by candle by candle, calculating every single time, takes far longer than if you just flash it all at once with vector BT. So that is the way to go. And yeah, I'm planning on doing a video setting up vector BT. So subscribe and I'll do a follow-up video showing you how I set this all up. This dashboard is all custom too, so I'll be showing you guys how to build a custom dashboard and setting up your custom local trading engine as well, so that when Claude is operating, it has some framework to operate off. Because the reason I'm using this framework is that while Claude's operating, it might just hallucinate unless you actually have a file or system or engine that it's trading with. So in TradingView, for example, all the logic that tells how much profit you made, all of that math has to be built in and calculated on their backend. So what we do this on our backend as well. So all of that has to be 100% customized. And the good thing about having it operate and optimize for you is that you're doing the out of sample testing. So you're learning, you're not curve fitting it. It's not going to be susceptible to things like repainting or any other weaknesses like that. Those are all ruled out with these methods, because we are randomizing the candles. For example, if we go to the Monte Carlo simulations here, this is one snapshot of one simulation where we randomized the candlesticks, which basically just means going to, like, if you're on TradingView here, we have a crash here and then it goes sideways. Well, if you randomize all of this, there might actually just be it flat up here, downwards and upwards, and it could realign all the candles differently with potentially similar volumes, or you could add artificial volume just to simulate a greater stress environment, and you could add more chop as well. So if a bot is performing really badly in these markets, but when there's a really clean move up like here, your bot might perform really well. But in between, when the market's really ugly like this, there's lots of liquidity sweeps, and your bot might, if it's trying to find a breakout, it might collapse in these markets. So that's why it's really good to add a little bit more chop to see if your system can survive, and it will usually always perform a little bit worse when doing so. For example, here, this only had 126 net profit compared to our out of sample, which was 205% net profit. Now that doesn't look like much, but keep in mind this strategy, the one that we built in the prior video, this is only a double EMA and then like one filter to filter out some trades. This isn't even that robust in terms of the elements to it. It doesn't have, a fine-tuned stop loss or take profit, or even like custom rules for how to exit trades with different math. So this is a pretty simple strategy just for demo purposes that I was building. And so instead of, customizing your strategy by tuning the parameters one by one on TradingView meticulously, this just handles it hands off. Like I can literally walk away from my computer and have my system build itself. So what we're going to do after it's built this really quickly, this should not take too long. I'm going to add a second layer to it. So what I want to add to this layer today, I could just ask it to brainstorm for me, or I could feed it financial information or even white papers from online, and then it'll pull from that and build the logic itself from there. So we're going to come over to our website here. This is the pattern site, and they do have, some historical information here. So we can just try one of these patterns, like an inverted gap, a gap 2H. We could try any of these patterns and then ask it to build these for us. So what we have here is pretty easy to do to identify these with code. We look for the pattern. It's just composed of one bar. The close must be within 25% of the intraday low. And really, I can just look for an unusually tall price bar. So we can set that as a parameter. And then we can test what that threshold has to be using our Python script. So we have our trading engine completely ready now to run these 3 backtests. So I'm going to run them. And then after I do so, I'm going to just, copy, all the logic here and just paste it directly into my chat here with it. So it'll build that as a secondary component to add it to our strategy to see if it works in conjunction together to improve the results. And if not, then that's fine. We can throw it away. We know that it doesn't work. That's the point of iterating this way. So I'm going to run all 3 right now, and it will completely brick my machine. It uses 100% of my computer. So I'm just going to pause right here and come back when it's done. So we did get 3 of these mean reversion strategies, and it looks like none of them were actually that great. I'll show you the best one here. This one here, I'm going to launch onto the dashboard. So this right here is the results on the out of sample. You can see it's not good. This is actually not performing in real time with new data. So this is a great example of a strategy that seems like in the normal training, this is just the in-sample data. It seems like it has potential if you added a couple filters. That drawdown is a little bit high, giving you a little bit of a warning sign, but the win rate is 63%. So you might think, okay, maybe it has potential, but when you actually go to the out of sample, it is not profitable. So we're going to do away with this, and then I'm going to ask my Claude agent, it's going to work on my computer to run 3 different strategies, and it's going to compare these new variations side by side. So we're going to learn from what we failed on earlier, and it'll just quickly run and build better strategies for me and then test them. And then I'll launch and I can compare these 3 strategies at the very end. And yeah, obviously one more note with this, these are the parameters that it selected. These were the best ones that it tested. It tested a bunch of different parameters, like I think over 2,000 parameters I had plugged in for it to run. And then this was the best one out of them. So all the other ones were worse. So given that, we know that this setup is not robust, and it's time to throw it in the garbage and abandon this method. We do not want to use non-robust methodology. But our 3 new variations are building. And from the 3 trading backbones that it made 3 different hypotheses that it took and back tested. One of them stood out, which was the Ichimoku. Now, the other ones had similar results like I showed you previously. They seemed like they work on the training data, but once you start testing out of sample data, they collapse. Now, this helps me quickly rule out bad variations, and so I went with the Ichimoku just as an example, and I started adding different layers to it. So I used different flat detectors, and I'll show you some of those variations now. So just with the base Ichimoku, it looked a little bit promising because yes, the drawdown is high, but we can get that down if we add filters like trend filters to help it avoid trading in the wrong direction. For example, just adding an extra EMA helps a lot, or adding flat detectors. So filters that turn off trades when the market is exceptionally choppy or flat or difficult. And so this one looks very promising. This is just the training data. Let's look at the out of sample data now just to see what it looks like. Still profitable, but that drawdown, again, still very high. Now, the number that I want to get up is this Sharpe ratio, and we want to get down that drawdown, because as a result of doing that, we're naturally going to have higher net profit. So I'm not paying so much attention to that net profit. What I'm looking at is how is it performing in these simulations, like the Monte Carlo simulations, like this one here on screen. This is just one example of one of the simulations. So yes, it seems like it can perform in these simulations with a 40% win rate when we randomize the candlesticks. And just let's look at what that is, right? I'll be showing this multiple times possibly in the future, but just to put an idea in your head, this is the normal Solana candlesticks. So this is the actual Solana chart. And then these 5 other ones here, color coded differently. This is random variations of this volatility. So sometimes it starts really high and then there's a collapse. And then sometimes there's more of a flat market here, lots of difficult areas to trade here. So it's very unclear, and it's not as clear of an uptrend like this, because you could just get lucky with, the real life volatility that we have in the market. Here's one, for example, down here, we have one of those, but it's only after a very challenging market period. And so does the bot survive up until this point when it can make a lot of profit on this one really big move? And then you could see variations like this one that are very difficult, like it's up and down and up and down. And so by doing these Monte Carlo variations, not only are we doing real backtesting on the training data, so this Solana here, we're only taking around 60% of this up until January 2022 here as our training data. So everything from the start to that point. And then after that, this is the out of sample data on the right-hand side. Now, really pay attention to, how that might look like when we do the Solana, because we do the exact same thing. We take our training data here, and then we have our testing out of sample data to verify the trades. And that's how we quickly rule out very bad variations. So this is one of those simulations. I also have other simulations here. This is the out of sample Monte Carlo simulations. So you can see here the variations that it got. We don't know what candlesticks, what they actually look like, but we know they're very similar to the examples there I showed you. These examples are these are literally generated by the machine that I'm using. So these aren't an example. These are quite literally the ones that are used. And there are thousands of these simulations that you should be running, and that I run for validation. And so if we add more trading rules here, let's look at these parameters for 1 second. We have the Ichimoku rules, but we also have a couple flat detectors in here and an exit rule. So it brought the net profit up, it brought the net drawdown down a little bit, and it brought that Sharpe ratio up. So comparing this just 1-to-1, let's go back here to compare these side to side. So 328, we have around 415 trades. So this knocked out 5 bad trades. And you can see I'm flipping back and forth here. We have a little bit higher arch here. And so slowly, as you see, I have a bunch of other variations here that you can see that I'm running. And I'm running all of these simulations, and you can see different parameters on the left-hand side, just showing, okay, well, each of these parameters gives us slightly different variations of these. So for example, here, very close on these, Sharpe ratio is just 0.01 off, but the parameters are just slightly different. So that's with the same rules, but just slightly different parameters. And then once we start adding, some really strong filters, as an example, this one I would consider invalid. It only has 6 trades, right? We have one very lucky trade. We have a lot of net profit on this one, but I just would rule this configuration out because we don't have enough trades. And so this is how I select. I'm just going to even close out of this window. Yes, the profit looks really good and impressive, but we need more samples. We need more data. Like this one has 345 closed trades, for example, and much more net profit now. So we've got some more signals and more rules here for trading, and we're trying to get that Sharpe ratio up. So that Sharpe ratio is slowly coming up here. And how I operated this in my Claude Opus was I just asked it to run more filters in my trading system. So, if you're on TradingView, for example, what that might look like is just adding more logic, more filters here. But the problem on TradingView is if you were just to just add more rules, you might be curve fitting it because you're adding more specificity, but you're not actually ruling out that you're just making it too specific. So that is the delicate knife's edge balance that we're trying to operate on. And so, yeah, you can do this on TradingView. It's just really challenging, and that's why on SignalSwap I've built in the backtesting dashboard. So this dashboard here you can run through your backtest just like I'm doing here on my own custom Python script, which I can show you guys how to build a quick version of this. The version you're seeing on screen here with all these variations, this took me a full year to develop, but I could do a quick tutorial video. So just comment down below, and I will do a video if enough people want to see that content. It is a little bit more technical. So my balance is trying to show you guys the technical aspects to all of this, because with algorithmic trading it's very dry and bland, but it's very important. The math, the statistics, the robustness checks, the Monte Carlo simulations. It's a balance of coding, math, and sheer willpower to stick it out and to make these variations that can work in real time. And so my job here is I'm trying to make content that's as educational and entertaining enough to have you guys want to obviously like the channel and like the content that I'm doing. So I really appreciate if you guys ask questions in the comments, and I want this to be a back and forth between myself and you guys commenting down below. I'll try my best to reply to comments when I upload the video. So let's just look at a couple more variations here. What I've got here is a bunch of different charts. So for example, this is Chainlink, and the other ones were on Solana. This one was on the Rune USD 1 hour chart. And so this one is Doge, for example. So if you really want your algorithm to flourish and to know that it's truly robust, it should work on different data sets. Now, it's not going to work with the same parameters on different data sets, but it should be configurable and reliable so that it'll pass, Monte Carlo simulations. It'll pass if we look here at the out of sample here, it should pass these. Now, of course, this is not a pass. This is a fail because 65% net drawdown is not a pass, but we're able to get a couple of these variations where it'll work on the Rune USD chart, and it will work on the Chainlink USD chart. So yeah, all of these charts are kind of telling the same story, like that net drawdown is around 50%. And so can we get it further? And that is the question. So as a backbone, this is Ichimoku, and the Ichimoku indicator, I've done a couple of videos on this. If you follow the channel, I did a Ichimoku video, and it was really popular. A lot of you guys like the Ichimoku setup, and this is what it's capable of doing alone. Now we could get it a little bit further. I'll show you a couple other variations that I have here. This one has a Sharpe ratio of 0.35, so we're in the same category. But we have this version here with a little bit more net profit, and the drawdown came down to 37%. Now, I was able to do this with just a couple different filters to turn off trading, and of course a couple really good exit rules, so trading exits that I was able to develop using my Claude Opus. So I just asked Claude to develop these. And what I was doing was I was plugging in content and material from online. So that can always just be like, if you really like a certain indicator on TradingView, you can plug that in to Claude. Like you can literally copy and paste the indicator. Now, Claude will try its best copy the math from it. And PineScript and Python don't align one-to-one. They're very different programming languages. But the math can be aligned with a lot of massaging. So if you really like indicators, you can have your Claude Opus, you can plug them in here and have it do it. Now, if you're just using SignalSwap, you don't have to translate it, right? Because SignalSwap works directly in PineScript. So you would just upload your PineScript here and it would run the backtest for you. So you can figure out all of the information we're talking about here just with staying in PineScript. So if you're on TradingView, I don't have it configured for MetaTrader yet, but if a lot of people want me to configure it for MetaTrader, I can. I work on TradingView, so PineScript is kind of what I'm familiar with, but I'm aware that MetaTrader is out there. It's really good. TradingView and MetaTrader, I don't think one is better than the other, but that's kind of the formula. So there's a lot of good indicators out there on TradingView and on MetaTrader. And so if you copy the code and you were to paste it directly into your Claude Opus, it is able to kind of try to emulate the math. And then if it's not identical, you can keep going until it is. And so that's how we're able here, after a little bit of massaging, to get this little bit extra percentage ticks. And this really matters. Like, we can look here at the out of sample just to see the really challenging market periods. If it's still held up, yep, 21% drawdown. Now, if we compare, this is the Solana 1 hour chart. So I'll go back to my other Solana one, this one. And if we look at the out of sample chart on this variation, it's 63% net drawdown. Now look how much we were able to come. 21% net drawdown, really stable. Sharpe ratio of 0.39. Now, a Sharpe ratio of 1 is considered ideal, but it's very hard to get there. That is like the golden ratio. And if you can get there with results not just on training, like, you can curve fit anything to Sharpe ratio 1, but if you're able to get out of sample data consistently to 1, and if we were to run this on the Solana chart or the Rune chart or Bitcoin or even gold chart or other stocks, Tesla or whatever you were trading, futures, if you're consistently able to get that Sharpe ratio of 1 and your trading engine can configure the parameters for it such that the out of sample data consistently shows high Sharpe ratio, low net drawdown, and then as a result of those, you're not actually trying to maximize net profit, but the net profit just goes up when those other metrics are really good, because people who all in on net profit usually don't do so well because you're only considering that one number when there's a lot of these other metrics that are really valuable down here. So that, like the bootstrapping simulations, these numbers are extremely powerful, right? We have our resilience scoring. So in all of the simulations, there are median numbers, median net profit and median net loss. And then there's also the worst performers. So in certain variations, if I go back to our trusty guide here, this is our chart showing the examples of what these simulations look like. One of these might be harder than another one for your trading bot. And so the worst of the worst, you kind of want to know that number. How bad can it get in any version of history? And your bot might do really well on the training data, but there could be another version that it does really bad on. And so you want the variation between those to be minimal. It's never going to be zero. You're going to have variation, of course. But looking back here at our out of sample data, we can look at some of the bootstrapping and Monte Carlo simulations here. So in this variation, this is just the median in out of sample Monte Carlo simulations. The median, it was net profit of 159 net profit with a win rate of 40%. So in his simulations, the middle simulation on average, this was able to be a little bit more reliable. And so I wouldn't call this strategy done. I wouldn't ship this immediately and start all-inning my trading account to it, right? Like, we're not quite there yet. With the Wolfpack bot that I've developed, we are there. My Wolfpack bot is that reliable that I've developed with the system that I've been showing in other videos. And of course, if you want to take a look at that, that's on wop.com/trade tactics. I have my Wolfpack bot, and what is it built off? The Wolfpack bot is built off the Wolfpack indicator here, which is on screen here, that this is my own custom indicator that I developed several years ago that's still a king as well. For example, it has these really strong buy signals, as this really big green dot here indicates a really strong buying opportunity. And then we have a lot of the bearish signals coming in, the blood diamonds showing that. So I have an indicator that you can check out. It's on wop.com/trade tactics. And then also there's a bot that was developed based off it as well, the Wolfpack bot. Now you have to configure the settings yourself. I do have some of the settings for that bot up in the Discord server. It's the best bot settings tab. So if you join the Discord server and you look at the best bot settings, I have some of them here. I'm running these variations now, and I'm building more variations as time goes on. But eventually, all of my variations for that bot and other bots that I'm developing are going to be on the SignalSwap marketplace, which you guys can list on as well for free. And you can come be an alpha tester and plug in your bots so that you can get the data necessary to make it onto the marketplace, because you need to have a profitable bot. All the data on the marketplace is 100% real live performance collected on the website. So there's no fake data. And if you come be an alpha tester, you want to come participate in SignalSwap and help with the backtesting server is just down now for another week, but it'll be up soon. And eventually we'll have a full marketplace. Everyone who's in the Trade Tactics Discord server, we've been developing for years now with this. If you're in the Trade Tactics Discord and you're a regular member, you can shoot me a message, ping me in the Discord, and become an alpha tester to get access to this website. And yeah, you can set up your bots and configure signals from TradingView to them, so you can start collecting profits from your trading signals to see if they will be able to be eligible for the marketplace. Here's if you want to see if your bot's eligible for the marketplace, you just hover this button here on screen, publishing requirements. So it has to be active for a certain amount of time and meet the criteria. So my bots aren't up yet, but they will be as well. And you'll be able to check them there with real live data. So you'll be able to see exactly what the bot has made. You'll be able to see exactly the real trades, the real signals that it took, and you can subscribe to it with that exact configuration as well for anyone who publishes their trading bot. And you'll also be able to see the backtesting data as well on it along with the marketplace, which is optional, but it's like an extra perk. If you run backtest and they're really good and you set that up, you can pair them on the marketplace. So that's kind of my, this is my own SignalSwap project with a couple other developers. So I've been working really hard on, building these systems and really wanting the algorithmic trading community to grow. So, if that's you, give me a shout, ping me in the Discord, and I'll set you up with subscription for SignalSwap just to help test. Right now, the signalswap.io website, it is locked if you try to go to it. But I'll give you the password for the website if you join the Discord and just ping me, just in general chat here. You can just send me a ping. I'll give you the password to the website so you can make an account and then start trading and letting me know if there's any glitches. It's not officially launched. There might be some glitches with some things. We're just ironing those out, and then it'll be live very, very shortly for all the rest of you. It might be live by the time you watch this video. So I'm going to wrap up here. This is kind of how I build these strategies, right? Like in this video, we went through exactly how, when to rule out a strategy, how to rule it out really quickly, which strategies we quickly decide are garbage, right? If they're just curve fitted and there's no parameters that work and it doesn't pass stress tests, you want to move on from that and scrap it as soon as possible. And when you're doing strategies manually, it's really hard to figure that out really quickly because you have to sit there tinkering with the buttons one by one. And even then, you have to split up the data and do training data. For example, look at this. It's 2024 on this data, and this is the out of sample. If we go back to the in sample, it starts far earlier, like 2021, I believe, on Solana, 2020. So this data here, this is the first slice of data. We splice it up. We run different tests to really do a full autopsy on the performance and rule out hyperfitting, repainting, things like that, and or even just flukes, because you don't want to leave anything up to chance, and that's the job of all these statistics that we do. So smash that subscribe button. I'll see you in the next video.